feeling that entrepreneurial buzz, the freedom of being your own boss. But then a sudden, unexpected expense hits, and you wonder, can I apply for CashnetUSA if I'm self-employed? It's a question that many in your shoes, the backbone of innovation and independent spirit, grapple with. You're not alone in navigating the unique financial landscape that comes with being self-employed. The traditional 9-to-5 world often has a clear-cut path for demonstrating income and creditworthiness, but when you're piecing together projects, consulting gigs, or running your own small business, that path can seem a little less defined. We've all been there. One minute you're celebrating a big win, a new client, a successful launch, and the next, your car needs a major repair, or an unexpected medical bill lands on your doorstep. For a salaried employee, a quick call to the bank or a look at their pay stubs might be all it takes to secure a short-term loan. But for the self-employed, the thought process immediately shifts. Do they even consider me? How do I prove I can pay it back when my income isn't a steady paycheck? It's a valid concern, and it stems from a fundamental difference in how lenders often assess risk. They're looking for stability, predictability, and a verifiable income stream. And let's be honest, the self-employed life, while incredibly rewarding, isn't always linear. Some months are booming, others are a bit leaner. You're constantly juggling invoicing, marketing, client management, and the actual work itself. When an urgent financial need arises, the last thing you want is to jump through endless hoops, only to be met with a no because your income doesn't fit neatly into a predefined box. You need solutions that understand the dynamic nature of your earnings, solutions that look beyond a W-2 form. Now, let's address the elephant in the room. Can you apply for CashnetUSA if you're self-employed? The short answer, and one that often surprises people, is yes, absolutely. CashnetUSA, like many other online lenders specializing in short-term loans, understands that the modern workforce is evolving. They recognize that a significant portion of the population now earns income through self-employment, freelancing, gig work, or running their own businesses. Their lending model is often designed to be more flexible and inclusive than traditional banks, which might have stricter criteria for income verification. However, and this is a crucial however, while they do consider self-employed applicants, the process and the requirements will differ slightly from those of a traditionally employed individual. It's not a blanket yes without any caveats. Your income verification will be handled differently, and you'll need to demonstrate your ability to repay the loan in a way that reflects your unique financial situation. So, what does CashnetUSA look for when you're self-employed? The core principle remains the same as for any applicant. They need to be confident that you can repay the loan. The difference lies in how you prove that. Instead of pay stubs, they'll typically look at a range of other financial documents and information to assess your income and financial stability. Let's break down the key areas they'll consider. Firstly, and perhaps most importantly, is your income. While you don't have a W-2, you do have income. This is where you'll need to provide evidence of your earnings. This could include bank statements, tax returns, invoices and contracts, business financial statements. The key here is consistency and verification. CashnetUSA wants to see a history of regular income that demonstrates your ability to meet your repayment obligations. Sporadic, unpredictable income might be viewed with more caution than a steady flow of client payments. Secondly, they will look at your credit history. While CashnetUSA is known for considering applicants with less than perfect credit, your credit score and history still play a role. A good credit score can certainly improve your chances and potentially lead to better terms. However, even with a lower credit score, they might still approve your application if your income verification is strong. They often use alternative credit assessment methods that go beyond traditional FICO scores, taking into account other financial behaviors. Thirdly, your debt-to-income ratio will be a factor. This is a simple calculation of how much debt you have compared to your income. Even if your income is substantial, if you have a lot of existing debt payments, it might raise a red flag. Lenders want to ensure that taking on an additional loan won't overextend you financially. As a self-employed individual, understanding and managing this ratio is particularly important. Fourthly, your bank account information is crucial. You'll need an active checking account for the funds to be deposited and for repayments to be debited. This also helps CashnetUSA verify your income through direct deposits. Finally, and this applies to all applicants, you'll need to be at least 18 years old and a U.S. citizen or permanent resident. Now, let's talk about the application process itself for self-employed individuals. It's largely online and designed to be straightforward. Fill out the online application. Indicate your employment status. Provide income verification. Review loan offer and terms. Sign and receive funds. A common pitfall for self-employed individuals is not having their financial ducks in a row. Unlike a salaried employee who can simply print out a pay stub, you need to proactively manage your financial records. This means keeping meticulous records, track all your income and expenses. Use accounting software, spreadsheets, or even a simple ledger. This will make it much easier to provide proof of income when needed. Separating business and personal finances. If you haven't already, strongly consider opening a separate bank account for your business. This creates a clear audit trail of your business income and expenses, making income verification much simpler and more credible for lenders. Regularly reviewing your financial health. Know your average monthly income, your typical expenses, and your current debt obligations. This proactive approach will not only help with loan applications, but also with overall financial management for your business. However, it's crucial to understand the costs involved. The convenience and speed of these loans often come with higher interest rates compared to traditional bank loans. Therefore, they are best utilized when you have a clear plan for repayment within the agreed-upon timeframe. Over-reliance on short-term loans can lead to a cycle of debt. Embrace your entrepreneurial journey, but also equip yourself with the financial knowledge to navigate its unique challenges. Understanding your options, having your records in order, and making informed decisions are the keys to financial resilience, whether you're working a traditional job or building your own empire. With that said, thanks for watching, and until next time.